I just lost a lot of money with cryptocurrency. I'm pretty much all in. I've leveraged up my portfolio. If you guys been following me on Twitter, I'm all in the market, all in the cryptocurrency market. But, there's always the chance, and it's, according to other people, a big chance that we can go into a full-on bear market. Now, if you watched last bear markets, there was 90% drops in the entirety of everything in crypto. It was a crypto winter. Now, I'm not trying to scare people. You guys know I've been very positive about the market in recent history, but we must be prepared for times like this, just in case, to buy the dip, to extend your capital. In this video, I'm going to be talking about bear market strategies you can use right now passively with a full-time job and not look at any charts at all, even though it still has its risks, and still make a lot of money. More than anything in the stock market, more than any other investment vehicle or passive investment vehicle on earth. Keep watching. What's going on, everybody? Alex back with another video, and my goal is not to spread fear. If anything, my goal is to spread confidence for everybody. And the only way that you could get confidence in this market is through vigorous education and dedication to the craft. So in my due diligence, I want to show you guys strategies just in case we do go into a bear market. Even though I don't think, it's a scenario right now. I think it's a better, more likely scenario that we continue higher for one more leg at the end of January, like I've been saying pretty much all my videos. It's pretty obvious what's happening right now. The fractal's playing out, and I'll show you some evidence with Bitcoin's price and everything that's going on with on-chain metrics and why I don't think the bear market is here. But I still think it's very productive that we get into the topic of, how are we going to make money in the bear market, okay? I've been doing, these strategies for a very long time, and this is probably what I would do to extend the capital. If you appreciate this content, do us both a favor, like the video, subscribe to the channel, and of course, share this with a friend that might be panicking in the market right now. Everybody's panicking, so you should be sharing it to like 36 friends. Because if you talk to anyone in cryptocurrency, they are all mad right now. The fear is at an all-time high, unless you're watching this channel, because you guys, I could tell in the comment section that you guys are pretty positive with the last video. So hopefully that didn't change. If you've been following me on Twitter and keeping up, I've been showing that I'm really bullish. So definitely head on over to Alex on Crypto on my Twitter. You can kind of get the quick vibes, right? Just because I don't make a video doesn't mean I'm like, falling off the face of the earth and falling into a deep depression because of the bear market. That is not why. It's just because I have a lot of things in the background. Again, if you want to get my quick updates, follow me on Twitter. So let's jump into the market really quickly. There's a couple of charts I want to look at. First off, Bitcoin's price. I've been saying this 1,000 times, and I'll say it 1,001 times. I do believe we are moving into this fractal right here. If you don't know what a fractal is, very simple. It's basically a carbon copy of the scenario that happened here over here. I've played this fractal out a couple times, and basically it leads me to believe that we are probably going to get reversed in the market towards the end of January. Okay, that's what I've been saying over and over again. I even said the market was going to drop and fill this wick over here. I said specifically that we would probably go down and sideways, similar to what happened in this fractal. And you can see why I said it, because the exact same thing played out. As you can see right here, we have manipulation in the market dumps, cascading, down effect with the liquidations in leverage positions, because the whales like to manipulate the noobs. And then you see this kind of sideways downwards action. We see a break in the trend right here. Then we see the break down below the trend. And actually you can see right after it broke down, this trend line, you see that it actually even got further than the original wick. Now, let's look at the exact same scenario now. We have manipulation, cascading down effect, a couple of single actors selling the market. Then we get the liquidations, this big manipulation candlestick. You could tell by the size of the candlestick and the price movement that this was clearly manipulation. Now you see the sideways downwards action here. Then we break the trend to the upside, and the exact same thing happens again. We break the trend down and we go further than the wick, as you can see right here. Is this not playing out? I called this months ago. I said this months ago, and it's playing out almost identical. Now, what I think is going to happen is very simply put. From here, we're going to move sideways for roughly 30 days or so. But if you look at how big this one is in comparison to this, the fractal is on a smaller time frame. So today is the 11th. So if this is playing out 30 days after this drop, then we should see about maybe 20 days. right? It's a guess. No one knows exactly when. I'm giving you guys the end of January because, that's just a guess, right? But you can see that's leading towards the end of January, January 22nd to January 30th. That is my exact play. I'll tell you if anything changes. This fractal can definitely get invalidated. It can just completely change from what it did before. But right now, it looks identical, and I'm not going to change my mind. Also, I want to show you something. We're going to get this rally up probably. We're going to get a little bounce, right? As you can see here. It's going to probably follow the trend line, and then we will get that third last bottom, which will freak people out again. So January is going to be a volatile month if it does follow this fractal. So pay attention to it, understand what's going on. In other news, we see altcoins not doing so well. It kind of bouncing off the top here, and Bitcoin's taking some dominance. And usually Bitcoin takes dominance when the market dumps in general. There's a lot of uncertain macro conditions, so people are freaking out a little bit. And if we come over here to ETH BTC, look at that nice little candlestick. This is also signifying that altcoins will probably rally after. And if you look at what's going on in the market, well, there's a lot of altcoins doing pretty well, regardless of this, volatility. Fantom's up 15% today, which we're going to talk a little bit about Fantom as well, because there's a strategy I want to show you guys towards the end of the video, which is the bear market strategy. I'm just talking about Bitcoin's price right now because you guys have been waiting up for an update. So there's a couple of reasons why, again, I don't think we're in a bear run. Okay, number one is I think we're around the visionary part right here to early majority. There's a lot of data that I've presented in other videos that lead to us just crossing the chasm. The biggest data is very simple. The early majority is going to get involved with the metaverse. Okay, this is like why the early majority would jump in. Now you could say the NFT craze was the pragmatist, kind of box here. But I think that the metaverse is bigger than NFTs. I believe the metaverse will have NFTs in the metaverse. If you guys understand what I'm saying, collectibles, this is where they will be viewed. This is where they will be valuable. If you buy a CryptoPunk, you probably want to have that CryptoPunk in this 3D land, if it's 3D, or if it's augmented reality, whatever it is, you probably want to show these things off in that, social media environment or social, presence, right? So I believe that, metaverse is probably going to spring the market right back up, because if we look at Bitcoin in the past, the decrease of issuance was a big factor. But towards the end of the market, it was adoption or demand that drove the market. So right now we are in a demand-driven market. People don't buy crypto right now because of the halving cycle. They'll buy that for the next cycle. So the last demand driver to me is going to be probably the metaverse. And I said this 1,000 times, okay? Now, if we come over here, you can see that pretty much lines up to what I'm talking about, right? Mass media hype buys in. So we are probably getting closer to that stage where early adopters investigate, and then we're getting the mass media. This is why we're seeing the biggest brands all over the world get involved. Now, there's still a negative perception. And I know this because I went to the CES concert in Vegas, and you could tell that people really just don't understand what's going on. Even if they're in the tech industry, they're still very skeptical and doubtful, and they're not pivoting their businesses into the blockchain, right? They're using the buzzwords like metaverse, but we know the true metaverse is on a blockchain ledger. That's the whole point, right? It gives all of these digital items real value. But if it's just a game and you don't own anything, how is that? That's not truly the metaverse. That's just a 3D game, okay? Facebook took the branding away. A lot of these companies are moving away from the blockchain side, which is the most important thing. So I think mass media is buying in the smartest companies, but we definitely have not seen every major company, especially the companies with Bitcoin on their balance sheet and publicly. We have not seen. We've seen like MicroStrategy is still the biggest company. Like there's bigger companies out there for sure, bigger institutions that will definitely take Bitcoin off the market, even whole countries that will take Bitcoin off the market. So I do believe that we are seeping into the mass media at this point. Now, also one thing to throw out there is that we will see altcoins probably die for a short period of time. And we're seeing that in Bitcoin's price right now in comparison to Bitcoin. And then eventually when we get closer to April, as you can see here, this is cycles for altcoins, right? We'll see more altcoins do very well. So pay attention to that as well. And then this is just showing, how long the peaks will last. So the law of diminishing returns of Bitcoin's price say, hey, it's going to last longer this time. People have been saying that stock to flow model is incorrect because of the time frames of the cycles, the 4-year cycles. I know this is very complicated, but basically the amount of time it takes for the top of a cycle to reach the actual top has been less and less. So we have a 2011 peak, we have the 2013 peak, and the 2017 peak. And these are the time frames of how long it took to get to the peak. Now, if we keep going on this trajectory, then we should see the peak in about 2023 or the end of 2022, which is adding to the case of what I'm saying. Bitcoin's way bigger now. There's more liquidity. There's more investors. The cycles will take longer. So it ending right now and we moving into a full-on bear run, I don't think so. And by the way, guys, I know we're talking about bear market strategies, and then you're probably asking, if we're not going into a bear run, why is he even talking about this? Well, you could actually use these in the bull run to maximize your capital as well. But be very careful, but you could. And I actually did it myself. So if we come over to this chart here, you can see that the decrease of issuance increases Bitcoin's price. And what that basically means is, the amount of Bitcoins printed or the inflation per year drops in half. And this, increases the scarcity element. And this has obviously been one of the biggest catalysts for Bitcoin's price to increase throughout the history of time. And, just bringing it back to what I was showing before, this is the actual visual. The metaverse will be the new reason to why Bitcoin and all of cryptocurrencies will increase. Okay. So as you can see here, Bitcoin halving starts the market, DeFi boom extends it. You could even see literally when the DeFi boom happened, we have this parabolic, kind of upshot here. And then same thing, NFT boom, parabolic upshot. And then you see metaverse started it. And, I believe, again, metaverse encompasses all of these. You could do DeFi in the metaverse. You could do NFT trading in the metaverse. You could play gaming in the metaverse. It encompasses everything. It's almost like it's the world to all the assets we're building, basically, if you think about it that way. That's deep. Somebody chop that out and put it on TikTok or something. Yeah, follow me on TikTok as well, Alexander the Marketer. But if we come over here, I want to show you guys something. Basically, this is adding to the case. This is somebody just pulling up different halving cycles and it repeating. And if we come over here, you can clearly see that it's playing out almost identical to every single cycle. So we should get a bounce and, hopefully the impulses and corrections of the cycles plays out the way it did before. And we don't hope, but you guys know I'm really bullish and there's so many reasons. On-chain metrics, everything looks great. And as you can see right here, we have a weekly summary of 50 plus Bitcoin signals from top on-chain analysts. So we're looking at a whole bunch of different variables. And as you can see from the color code, we see, green as buy, yellow as hold, and red as sell. And the minority of all of these are saying to sell, okay? They're saying the floor price is further down, but the majority are saying to hold and buy. So this is why a lot of on-chain analysts have been really bullish in recent history. I said this in my last interview with Crypto Love, but basically, it's very simple, guys. The reason why on-chain analytics look great right now and why a lot of people are bullish is because you cannot manipulate it. It's just looking at transactions. But when it comes to a technical analysis perspective, these whales, these institutions have a complete history of invalidating technical analysis to manipulate people on purpose. If I am a whale or a hedge fund and I have 10 other hedge funds buddies and a golden cross is about to happen, or, there's a death cross about to happen, I want to make that death cross actually happen. Right? I want to force the price down even further on purpose. So all the technical traders, trade with that, right? Because there's an obvious flow to where the money goes when people trade, right? You can literally go right now to TradingView and see the top trade of the day and how popular it is. Everybody's following this exact thing. TradingView is one of the biggest financial websites. So if I'm a whale, I'm gonna go to TradingView, I'm gonna look at that chart and I'm going to invalidate it to force the market down, right? And scare people out. And then I'm going to buy the market at the bottom and then validate it and make sure Bitcoin goes up and make sure it looks good from a technical analysis standpoint, right? That's what I'm going to do. I'm going to manipulate the market. I'm going to be a step ahead of everybody else. But when it comes to specifically on-chain metrics, these are tracking metrics that are new. It's a new type of data set class. It's harder to manipulate, and they're taking every transaction in all of cryptocurrency into consideration, meaning even if a select few whale actors start manipulating the price, or doing something to manipulate on-chain metrics, we'll definitely see the majority outweighing the minority, if that makes sense. So in general, I'm bullish with the market because I believe on-chain metrics give you a better visual to what's really going on, a more organic, non-manipulated visual. I think everybody watching this video can agree that institutions, in 2021, 2020, started getting in. In 2017, we did not have this manipulation. Look at the candlesticks, look at the charts, look at the dumps. It was just completely different. Now they are clearly taking advantage of people. So understanding these strategies that I'm trying to explain to you are really important in dictating the narrative or the consensus of the market. All right, so I want to show you a concept called generating yield. And this is where I'm going to actually get into the actual strategy of how to survive the bear market without selling your crypto, being able to pay your bills, and actually making money through the bear market. Okay. So if we come over here to CoinGecko, you can see there's a lot of decentralized finance cryptocurrencies. I know, a lot of you are not into decentralized finance. Maybe you're into gaming metaverse coins, or maybe you're just buying crypto on Coinbase. But believe it or not, guys, there's a whole world out there of different financial applications, right, that you can use in conjunction with each other to make different types of yields. So this is an actual visual here I created. You can see that, let's just hypothetically say, this is obviously not true, but let's hypothetically say we see a yield on a DeFi platform. So let's just say you're in finance. This is not a real strategy, but this is how you do it. And I'm trying to explain the concepts. And then towards the end of the video, I'm just going to give you a strategy, okay, that I'm literally doing right now. And the transaction fees are very cheap. So you could do this with less than $500. You could do this with $1,000. It doesn't matter. So if we come over here, the concept I'm trying to explain to you is that there's different platforms, right? We have the DeFi platform 1, we have 2, 3, and 4, okay? So you could deposit your money on DeFi platform 1, and it usually has an application or a use case. It can vary on what it is. But when you do it, they'll supply you a fixed rate yield, right? They'll give you about 0.5%. That's just a hypothetical number. And then they'll give you a second token for doing that. So a lot of times it's called the LP token, or, a placeholder token. And basically you'll have another one that you can actually supply to another DeFi platform and then get yield from that as well. And then that gives you another token, and you supply it to a third, and that gives you yield as well. If you know what you're doing and you know all the DeFi apps, they actually work together to give you like a total yield of like a bigger number, because you're using multiple financial applications. So it's just super interesting. And the beautiful part about crypto is that it's omni-channel. And what that basically means is that your one wallet gets access to all these products. So I want you to think about trying to do something like this in the traditional internet or the traditional world, right? You'd connect Wells Fargo to Chase, and then Chase to this bank, and then Zelle to this, right? Like, it's not going to happen. Like, it's hard to connect PayPal to Wells Fargo. It just is. And even if you did that, it gets like more complicated as you connect more centralized exchanges together. In this case, they all work off of one wallet. It's an omni-channel, meaning there's multiple channels. This one wallet allows you to work anywhere, right? And that's the beauty of DeFi, is that you could take advantage of all these strategies. Now, if you come over here, this is also a beautiful thing in DeFi that just recently came up, which is layer 2 platforms and other layer 1 smart contract platforms. As simple as that, guys. When I was in DeFi and DeFi summer, we were calling these DeFi coins on this channel, and I was like really going hard on DeFi. It was $150 in some cases to get into a liquidity pool and make one of these trades. To get into one of these platforms, like $150 in. And if I ever wanted to take my liquidity out, it was $150 out, right? So it was very expensive. And, my audience couldn't really benefit from this, right? And also, a lot of times, if you don't have a lot of money, chances are you're working like a full-time job or 2 full-time jobs, right? To make ends meet, to pay your bills, right? So it's I just have more time because my whole life is invoked in this. So I can spend the time and, pay $150 and, make sure every little detail is ironed out. But the beauty of paying less transaction fees with layer 2s and other blockchains, when you're spending 25 cents to go in the liquidity pool and 25 cents to get out, is that you can get out whenever you want, as quickly as you want. You can make as many mistakes as you want, right? Because that was a big problem. Like, if you went into the wrong liquidity pool and you realize you didn't want to do it, you have to pay another $150 to get out. So how could you ever use these DeFi programs and these DeFi platforms if you can't make a mistake? It costs you $300 to make a mistake. You can't play with $500, yield. You can't get any yield with $500, basically. You would have to invest like a minimum. I used to say to my group, I was like, hey guys, if you're going to follow my strategy, you have to invest a minimum of like $2 to $5 grand for it to even be worth it. And even $2 grand is not worth it. You're losing $300, right? The APYs have to be very high. But with layer 2s and these other layer 1s, it made it very cheap so that I can get in and out for 25 cents. And this is obviously very beneficial. So yes, you could, I'm saying this on my channel for the first time. Yes, you could actually get a significant amount of money with small amounts of money. You could put in $200 and do better than you would ever done in any other financial vehicle with just only $200. That's absolutely ridiculous. There's people on other sides of the world that can get like a year's salary. Like that's how crazy this yield is. And if you have USD in your bank, it's collecting dust. I mean, some of this is risk-free, not completely risk-free, right? There's smart contract risk, and you should understand that. And I'll do the best of my ability to explain it to you guys. But I will say it's not volatile. Stablecoins are not volatile, right? You can hold a stablecoin and get 25% APY. So if we come over here, Fantom's obviously been doing really well. And I have a lot of Fantom. You guys know that because I've been talking about on this channel for a long period of time. But I wanted to put the Fantom to better use. So let's jump into the actual strategy. So let's say hypothetically the market dumps and, you know, I'm holding Fantom. I held the bag, right? And my portfolio is down, you know, whatever, 60%, right? What I could do instead of selling my Fantom to make ends meet and pay bills is that I can actually come over to this website called Abracadabra.money. Okay, and you could check this out. They actually have a Fantom chain and they have other chains as well. They have Ethereum, they have the Binance Smart Chain, they have Avalanche, Matic. So you can search it up for yourself. And basically I could supply the Fantom, and I'm actually going to do it on video right now in front of you guys. So very simple. If you don't know how to use MetaMask, you probably shouldn't be doing this in the first place. Definitely head on over to the second YouTube channel that I have in the description below. It's primarily tutorials, and they can teach you how to take your money from the centralized exchange over to the MetaMask, and then from the MetaMask to do things like this and you know, interact with Web 3.0. Definitely head on over to Anora. I'll leave the link in the description below. But for now, I could just show you a tutorial. If you already have the funds in your MetaMask, if you already have the Opera network set up with your actual wallet. So as you can see at the top, it says Fantom Opera, and this is Fantom's mainnet for fast transaction speeds and cheap fees that we keep talking about. Very, very cheap. And I can come over, let me just kind of go back to the main website. It's going to look something like this, right? And what you want to do is you want to go to borrow, and I'll show you one of these financial applications, these decentralized financial applications. So I have Fantom, and I want to put my Fantom to good use without selling it, right? So let's click Wrap Fantom. And then we can go over here and actually supply, and I can click regular Fantom. The W just means wrap Fantom. So you could just do the regular Fantom, right? And you can see I have a good amount of Fantom here. I have about 13,000 FTM. Now they're going to give you an actual ratio where you can borrow MIM. Okay. So MIM is called Magic Internet Money. This is basically a United States stable dollar. So it stays the same price as the dollar. It is non-volatile. It's a stable coin. I'm sure a lot of you have heard of USDC and USDT, right? So from there, what I want to do is pick a liquidation price. So basically, if the price of Fantom continues to fall down, there's a certain point where they'll just take your Fantom, right? Because remember, you're taking USDC away from it. So I'll explain more, but it's very simple. If I were to do something like this, I've already thought about it. I would probably take from my 13,000 Fantom, I'm going to take about $5,000. So let me show you. So I'm taking $5,000 out, but I'm keeping the 13,000 Fantom. This is very important because you just effectively went from 13,000 Fantom. If the price of that goes up, you make money on all that Fantom, but then you actually have an extra $5,000 that you could use to pay bills. You could use it to buy a vacation, which you probably shouldn't, but you could. You could use it to generate yield in the bear run, which I'm going to show you right now. Okay. But let me just show you a couple of little things because this could get complicated. If we come over here, you can see I'm taking 5,000 MIM, okay? And it's saying an expected liquidation price. So what that basically means is that if Fantom, because remember, I'm supplying Fantom, I'm giving Fantom to this decentralized protocol, and then the decentralized protocol is giving me back 5,000 MIM, which is $5,000, right? So if we come over here to Fantom, you can see the current price is $2.55. Let me pull up in TradingView real quick, and I can show you how much percentages down that would be. And this is actually a very good strategy to use. So if we click launch chart, right, let's figure out, you know, what the liquidation price would be if we go to what they were saying on Abracadabra, which is right here. If it gets down to 77%, how much percentage loss is that, right? Because it's pretty a lot. That's a lot of loss. So if I come over here to the current price, if it goes down to 77 cents, then that's like way down here. It's like a 60, even more than 60% loss. It's even more than that. It's not even going that far. Let me pull open right here. Let's just go a little bit further. So if we come down here, even further than that, look at that, 77. So it would have to drop. It would have to drop like 70%. Okay. Now it's likely that could happen. But in that time period, you could easily just add more Fantom. So you can dollar cost average into Fantom, and it would make that liquidation price less and less. But the goal is to not get liquidated, because if you do, they have a liquidation fee. I believe the fee is about 7%. You could definitely look into the documents for more information. This isn't the only tutorial you should watch for this type of investing. All of this has very, very high risk, you know, issues with it. For example, they can hack the protocol. You know, there's people that can do that. Now, I will say that I only recommend things that I do myself, just to be clear. So I've analyzed the risks. There's smart contract risks. There's hacks. You know, there's economic attacks. But you know, there's no impermanent loss risk, which I don't like to accrue with yield farming strategies. But I do believe this is like I said, a safer bet, especially if you play with a collateralization ratio like that. I mean, honestly, I probably could get it to like 7,000. Yeah, so if I do 7,000, the price would have to come back down to $1. I think I can handle that. I don't think it's coming down to $1. I don't think Fantom's going to drop 50% anytime soon. So I could replay it later. So I'm going to just click add collateral and borrow. So I'm going to come over here and I'm actually going to press confirm. I tried to explain that as best as possible. This is high level financial stuff, guys. So you must do your own research. Read the documents in every single platform I have. If you just scroll to the bottom of any page, usually they'll have a Medium or an actual document page, like a FAQ. And it's very, very smart if you guys do that every protocol I'm talking about in this video, so you understand every little risk. So if we come over here, you can see that the fee is ridiculously cheap, meaning I can get in right now and get out and I will lose like 30 cents. That's the beauty of this. So at least do DeFi on Fantom so you can play around with it. And like you can spend $1 to lose a couple of transactions or whatever, because you know this will help you learn as well. So let me just press confirm and then let the Fantom network do its thing. And then I'm going to show you my wallet. Well, you know, the new MIM that's in my wallet. So let's let that go through. But first, let me just try to explain this a little bit deeper one more time so you guys understand what's actually going on. So again, I'm depositing 13,000 Fantom. All right. I'm receiving 7,000 MIM, which is a stable coin. I'm still keeping exposure to the 13,000 Fantom. So I'm not taking anything away from that. And I'm getting kind of like this free $7,000 to invest into whatever I want. But the thing is it's not really free because you have to pay it back eventually. But it's almost like it's you're getting more exposure to the market. So it allows you to make more money when the market goes up. But if something negative happens, then yeah, you'll lose more money as well. In the case of MIM, if you keep it a stable coin, you actually won't lose anything if you supply it to the right areas, which I'm going to show you in this video. But there's always a chance that one of these contracts could be hacked. But I'm going to tell you right now, the contract that I'm putting this into, I have gotten, you know, my money hacked from there one time and they refunded my money in the past, which is Yearn Finance. Okay. So they actually have something called the Iron Bank. And right now they're offering 25% APY on USDC. They're also offering 7.66% in MIM. But why would I want to go for the MIM when I can get the USDC? So I'm going to show you guys how to swap it over. So if we come back over here, let me just add collateral and borrow. Did it go through? Let me just make sure it went through. All right, guys, let me try to do this one more time because I have to use Fantom as a transaction fee. So I had to lower it to actual 13,000 so I could use the other Fantom to make transactions. So I'm going to add the collateral and borrow. And then let's try to do the transaction one more time and press confirm. There you go. It should go through now. Thanks for taking part and innovating on MIM. Consider yourself extremely early in taking part in creating the stable coin that has no bias and no walls. So yeah, it's interesting that they say that because the whole point of these decentralized applications is that it's permissionless, right? Meaning anyone on earth, no matter your skin color, your gender, it does not matter. You can get access to this, even your age. And it's just beautiful that we even have this technology in the first place. So transaction, did it go through? Let's check it. Yeah, it looks like the transaction went through. So I'm going to go over here to CoinGecko and I'll show you a little feature that you guys could do where if you go to MIM, right, and you go to Magic Internet Money and you grab this address here. Now, this is Ethereum. Remember, we've been on the Fantom mainnet. So if you go to Fantom and you copy that, you can come back over here to MetaMask and you can go to Assets. If it doesn't show, all you have to do is click Import Tokens, click Custom Token. Token has already been added, so it's already there. So let me just exit that off, but you could add it if you don't see it. And you can see a MIM right there. So there you go. I just added the Fantom to the smart contract, and now I have 6,999 MIM, which is a stable coin. And now I'm going to do the last step, which is, I told you, I want 25% APY on Yearn Finance, right? So I need to turn the MIM into USDC. So I'm going to go over Spooky Swap, right? Let's go over the Spooky Swap, and then I'm going to click swap, right? This is just a decentralized exchange to swap. So I'm going to click MIM, add MIM. Okay, they're adding it to my wallet, but I just want to click MIM. You see the MIM there, and I'm going to switch it to USDC. And we are trading on Web3, guys. And I'm going to click max right here. There you go. Oh, look, I got USDC. Prove MIM. Oh, the transactions are fast. Oh, Fantom liquidity depth is high. Oh, what's happening right now? This is crazy out here, guys. Decentralized trading, click swap. Is it already done? Confirm. I could do a full tutorial with no cuts because life is good. It's crazy. We're in this L2 world. Approved transaction. Oh, we're done. Okay, let's go back to Urine Finance. All right, you can see I already have $3,726 into, in this investment right here with 25% APY. So again, Urine Finance, Iron Bank. If we come over here to the top, you're gonna see Ethereum and Fantom. You click Fantom because remember we're on the Fantom network. Okay, then you come over to Iron Bank. Okay, urine.finance. Let me go to the main website. I'm gonna go through it one more time for you guys. You go to urine.finance. You come over here to Iron Bank. Remember, the last time I got hacked on Urine, they paid me back. It's weird, but it happened. Your bank won't even pay you back 90% of the time. Or no, they probably pay you back. But if we come over here, you can see the USDC, click supply, and then we press max, and look, where did that USDC came from? You know where it came from. It came from the swap, right? And I'm gonna press supply right there, press confirm, and there you go. Transaction submitted. Now I'm technically making an extra 25% per year on this $7,000 that I don't technically own. So it's not exactly free money because you're taking on risk, but it's free exposure. You're getting more exposure to the market. So again, if we look back at the Fantom position right here, I get liquidated at about $1 Fantom. So if I get close to $1, I'll add more Fantom. Okay. If Fantom goes up in price, this liquidation ratio gets better, right? So it's harder for me to get liquidated, and I'm making money on this $13,000 with the Fantom because I still own the 13,000 or not dollars, but the 13,000 Fantom. But for no reason, I withdrew 7,000. Okay, I swapped it to USDC and I put it on another platform for 26% APY, which I'm getting free exposure to, which doesn't really matter. And I could even borrow from this, which is crazy, which I'm not going to do. But I could borrow again if I wanted to and then supply it somewhere else. And this is kind of showing what I'm talking about here, right? So all I did is I did 2 steps. You could do 4 steps. You go 4 steps deep if you want. But the way I did it in this specific strategy, I only did 2 steps. I supplied the Fantom here. I took the USDC, supplied the USDC to 25% APY. So in this case, I get the upside exposure to Fantom, and I get the 25% APY for no reason. And you can see how in the bear market, this would be good because if you have a lot of crypto, it drops 80%. There's no way you're going to sell it, right? So at that point, you can take a position and use the USDC to pay your bills, because that was a big problem for me in 2017. I didn't want to sell my crypto, but I also had to pay my internet bill, right? So I had to sell some of it at a loss on just to do that. So this will allow you to hold through the bear run and also generate more yield through the bull run. That's it for this video, guys. If you like the quality of this content, hit like. If you don't, leave some constructive criticism, subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this, guys. Catch you in the next one.